Let's talk about some movers ahead of the opening bell here. Beyond Meat shares are down by 18% after the company saw lower demand for its plant-based burgers and sausages. Revenue fell by over 30% in the last year, and the company now expects revenue of between $360 and $380 million for this year. Matt Maley, Tabak Managing Director and Equity Strategist, is still here with us. The company also says it's not going to be cash flow positive in the second half of the year like it predicted before, Matt. What do you even do with this thing?
Well, the big concern is my take is a little bit different here. Is that the biggest concern is that the question, the issue you just talked about, it was the demand is down. Yeah, that's a problem. But they're talking about cash burn. I mean, they're going through cash now. They're not getting cash flow positive, and so what do? They have to turn and go back and raise more money. The problem is now people kind of forget the real reason that Silicon Valley Bank went under was that because there was a run on their bank. Why was there a run on their bank? Because all these startup companies weren't getting any new money from the private equity and venture capital people anymore. After the Fed has tightened tightened lending. Has tightened the overall policy. Liquidity is much less plentiful, and there's less money for these people to give out. I mean, I'm not saying that Beyond Meat's going to run out of money and they're going to go out of business or anything like that. But they need to get cash flow positive. I mean, they need if they're going through cash at a fast rate, that's something that is going to be a big concern for investors. So I guess my point is, I'm not surprised that this. We've seen some big declines of 6, 7, 8% in certain stocks. This one's down a lot more because of this issue that. I think people kind of forget about what happened with that banking crisis just a few months ago.
Matt, when we think about normalization for a company like Beyond Meat, post COVID, everybody rushing to the freezer aisle to try and get some of the alternatives perhaps put into their fridge, and that spurring some of the growth for the company and that different retail side of the business. And then even prior to the pandemic, you had the restaurant side of the business and all of these flashy partnerships that Beyond Meat was able to see some new deals come about through, or at least tests or pilots with their Beyond Meat patties and sausages and so forth. So post-pandemic now, what does normalization look like for this company?
That's the big question, because we just don't know where was that demand. Was this one of the things that was kind of a fad that people got excited about because they were they want to do things, they want to eat less meat. There's all sorts of environmental issues involved with that. But with inflation getting higher, people are like, I want to do what I can, but I've got to I still have put food on the table for my family. I mean, let's face it, we still have 60% of Americans living paycheck to paycheck, and they're becoming much more concerned about how much they're spending on everyday expenses. Does that turn this thing into a situation where people are like, geez, I'd love to do that, but I just can't afford to. So I'm going to move away from these things like Beyond Meat and other non-meat substitutes. And again, so you have a situation where you worry that this has just been more of a fad is too strong a word, because people do want to do it, but I just don't see it as something that is sustainable in a time when the economy isn't doing as well as people would like. Again, avoiding recession is one thing, but big economic growth is not what we have on our horizon.
And just quickly, Matt, is this something that you would recommend people buy?
I would stay away from it for right now. I'm not worried about them surviving, but with companies that are burning through cash right now in a situation where private equity firms and venture capital firms have less money to give out, this is going to put a strain on their business. And I just think that there's other places that you can buy the dip and have a lot better opportunities.